All right. Hello, everyone. So here I am about to do some stock research live for you all. Well, at this point, it's the first time I've done one of these for stock research. So at this point, yeah, let's see how well I do for the first time through. Hopefully you enjoy the process. And from there, just going to keep this up for you to just ensure that you do get the opportunity to see more of my process, and I'm going to upload this on some of our other channels. Was going to do this a little earlier today, but was a little busy. But at the end of the day, all that matters is that it gets done. So without further ado, here is a little preview for my stock research process. All right, so let's look here. So I have some stock screeners that I've already created for myself on Yahoo Finance. So here's a just quick primer on how to do that. You can go to create new screener. You can pick whether you want to look at, market cap intraday. I want to look at small cap, mid cap, large cap, mega cap. Mega cap is just those biggest stocks, right? And then large cap, mid cap, small cap. So those small cap ones, like those could be OTC stocks, or they could just be stocks that you're just looking at. It's like, all right, what are some ones that are a little cheaper that have a really low valuation if I'm trying to find some like hidden stocks people don't know about? Can also look at price intraday, greater than a certain value, less than, equal to, or between two numbers. So to show you what it looks like between, so you can look at that aspect. Or like if I want to choose a specific sector, like let's say that I want to find mid caps, say greater than $10 a share. So see how those estimated results already immediately go down. Sector, y'all know I like the energy sector. I like tech as well. Let's look at industrials too. These are my three favorite sectors right now. And let's put that up to about 15 a share. So estimated results to 519. Industry. Oh, wow. Let me look at refiners, drillers. I'll look at components. I really like materials people as well. Semiconductor, we got that shortage. So right here, I'm already down to 35 stocks. Let's see what else we want to look at. Building products and equipment. I like that. Let's look at freight and logistics. We got some supply chain issues going down. All right, puts me at 58 stocks right now. Let's find some. All right. Let's see here. So here's some names in here. Brooks Automation. All right, I know that one. That one's based East Coast, Massachusetts, I believe. There's Valvoline Oil Company right there. This is 1 to 25 of my 58 results here. I can add it to my portfolio. There's a few links and everything on here that are related to these. Next page, Sonico. No, that's oil sector. Venture Corporation. Plexus, Gibraltar Industries. What I want to look at. Let's see the volume of the stock traded. All right, so right now I have it in reverse order for volume. I want to switch that to the stocks with higher volume. Louisiana Pacific, okay. All right, pretty solid number of shares traded. Ooh, okay, DACO New Energy Corp. It's a pretty decent rise today. I see the 52-week range goes all the way up to 130. Louisiana Pacific 52-week range goes up to 76.35. I like these two right here. We add that to a weekly to check that a little bit. All right, let me look at DACO and Louisiana Pacific. All right, so one thing I like to do, I like to check that 1-year price target estimate. Also that fair value, but a fair value I kind of take with a little bit of a grain of salt because you have some of these big whales that are capping sometimes. Let's see the year-to-date performance. Okay, so it's been moving right along with that energy sector strength, following those trends right there. You can look at the 5-year history as well, and I see some solid growth over the last 5 years. Last time oil was super high, it was right along with it, and the biggest high it got to at that time is 29.67. So we've actually doubled in the share price since the last time oil prices were at these levels. So that tells me that this company is actually growing. Okay, I like that so far. Let's look at DACO New Energy. 1-year price target 99. All right, fair value estimate. All right, so I got Yahoo Finance Plus, so I get a few more of these things on here, like chart events that it kind of tells me about. I look at them myself too as well. Performance outlook, I see the short-term performance outlook, midterm, and long-term. So that short-term outlook, anywhere between the last 2 weeks or the coming 2 weeks and then next 6 weeks. That midterm, as it says here, 6 weeks to 9-month period. Some people do midterm more to about the 6-month mark. And then long term, depending on who you are, might either do 6 months, 6 months or more out, or 9 months or more out. So anywhere from 2 quarters out to 3 quarters plus. Let's look at the 1-year history on this one. All right, February, it's booming. Why would that be? Let's see, where are they based? China. Okay. So February, China was really getting roaring again with their manufacturing for one. And semiconductor equipment and materials. This is the technology. Ooh, solar. All right. They make photovoltaic product manufacturing. All right. So I know China is really heavy into getting solar infrastructure going. I'm looking at the volume on here as well. But one thing I'm wary of is, for me personally, like, I don't really like to invest in a lot of stocks from companies that are solely based in China. So I don't know. I'll look at it. Something I might trade options on, but I don't know if I want to stay invested in it personally. I mean, others might not care and might just go ahead anyways, but you do you on that. So I'm going to focus a little more on Louisiana Pacific Corporation on this end. Building products and equipment, industrials. Oh, so I wasn't even right. That's not even an oil company. All right. Manufactures and markets building products primarily for use in new home construction, repair, and remodel. Okay. Siding, wood products. Okay. Trim and siding. All right. Industrial business in North America, Latin America, headquartered in Nashville. All right. So they got some decent tax benefits from being in Nashville. Look at that right there. It's a little nice story. See, this is a nice thing about these stocks on Yahoo Finance too. You get to see the stories. You also get to see the recommendation trends, how people move from hold, underperform, sell to buy, strong buys. So we got a lot more people switching to hold, basically saying that, like, hey, we don't know how much this will move in the short term or the midterm, but this is more something that you might want to look at just holding the stock in term, or just buying a little bit of it rather than buying a lot. But that buy rating is still at a 2.2. Average price target's the low for the price target is 69. The high is 100, average 80. All right. Okay. So people are really starting to like this one, huh? Next, I'm going to go ahead and look. All right. See the market cap on here, the beta. So that's just essentially how much volatility it has compared to the market as a whole. Earnings per share trailing, TTM is trailing 12 months. PE ratio. So PE ratio average historically for the S&P 500, I believe, is about 18 to 21. PE ratio here on this company is about 8. So we want to check the PE ratio compared to the other sector, compared to the other stocks in this sector. If it's lower than the other in this sector and its financials are really solid, then that means it's heavily undervalued. But PE ratio under 10, especially with a company that people are saying that it could close to double, that makes me think that, all right, the average for this industry, or at least a stock that's doing this well in this industry, It's probably something closer to 12 to 15. So I'm already thinking this one might be a little undervalued. They pay dividends as well, 1% dividend yield. Dividend stocks, those are ones that keep paying you each quarter. Companies can change their dividend yields, but it looks like on this one, forward dividend yield, yeah, 1%. All right, that's decent. So essentially, if I had 100 shares of this, my dividend would be 64 times 100, $64. That's 100 shares. That's a lot of money. It's almost 6K, but that's just for reference, so you all know. I see the volume on here pretty close to the average volume. So this is the average 3-month volume. So that was on an up day that people were buying like that. So the volume wasn't super high on the up day, but I do see that at the very least, volume trends have been pretty solid. I saw this rise over here and I saw some pretty high volume with that. This day right here, we had a dip, some more than the average volume dip right there, in that time frame right here. It looks like for the day. But then when we're coming back up, I'm seeing increased volume again. So I don't know. Okay. So the reason this turned red here is because from the beginning of the time period to now, it's basically like it's underwater, So you see that line 61.67, it's underwater to that 61.67 line. So it's just saying since June 8th, underperformed technically, but still looks like we're in a pretty solid trend here. So I'm looking right here. I look at that 6-month line. All right, we've definitely blown that support line. But if I look back here to March 50, and just off rough estimates and looking, it looks almost like 55 or so is the support that I'm seeing. Yeah, about $55 support. And then if I do like a rough outline to just look at in terms of trend line, looks like resistance here, probably about that $63, $64 mark. All right. Okay. So looks like we're bouncing up closer to that higher end. But we did bounce off 60 here. So our very short-term support's looking like about $60, $61. Something close, more akin to a midterm support is looking closer to that $64 range. And then that closer to the long-term, I've been saying support over and over again. I'm at resistance. And then something closer to that long-term resistance mark looking like about 73.50. All right. Okay. All right, let me see on here. Something I like to do is like conversations as well. So I can look at the bearish, bullish, neutral is something I can add. Top reactions, but let me just look at recent profit taking. Fibonacci retracement. All right, so for those of you that don't know about Fibonacci lines, so it's like about fractals. So this is another reason I love Investopedia. Little Google shortcut here. Guide to trading using fractals. So essentially it's like, I think 0.612 is so bearish fractal, bullish fractal. So you kind of see how these are moving in that kind of like harmonic fashion. Because things in nature, we typically see them grow in terms of fractals, like flower petals, how they kind of grow in that circular motion. And then if you notice like the difference in coloring from the middle to the outside, if you were to measure it, you would see lines at about 0.382, 0.61, 0.618 or so. And then I can't remember the other numbers off the top of my head. But essentially, people think that stocks typically move in a fractal fashion. If you look here, you kind of see just these motions and how they go here. Doesn't it kind of look like it's almost like, perfect? So during a larger uptrend, when the price pulls back to the 61.8% retracement level, 0.618, fractals could be added to the strategy. Trader only takes trades where fractal reversal occurs near the 61.8% mark. So look in here. So this would essentially be bearish trend. So I'm measuring the fractal top from here. 0.236, 0.382, 0.5, 0.618. If you add 0.618, 0.382, what do you get? 1. So if I'm looking on here again, All right, all right, all right. Huh. If I look at these lines here, so essentially we broke the 0.236 support here, but we quickly recovered here. But as you see, we did break it still. So we get that immediate bearish trend. And what do we see from there? We break all the way down to the 0.5. We broke the 0.5 support. So the next line down was a 0.618 support. We did about break it, but this day ended green. So we came back up and reclaimed over the resistance line at 0.5. All right, so that shows me, uptrend coming. So immediate uptrend from the 0.5 mark would be the 0.382 reversal. All right, we break that again right here. Here we move up. We break that resistance at 0.236. We come back over again. So we're broken that 0.236. The next bound force is at 0. So if that reversal is going to complete here, go completely bullish, I'm looking at, all right, we might have a new breakout coming. And here we go, just like that. Huge breakout. All right, we're in a bullish pattern, baby. From here. So you see how it says exit here. This is where they entered, right at that 0.236 mark, because it wasn't just a small jump over. It's actually a pretty massive jump over. So if you were to enter your trade right here, knowing you just broke that line, and we have that bullish momentum from all the way down here, all right, this reversal is going to complete. And you would exit here seeing that top, because you essentially see 4 days or so in a row, we're staying within a thin range. So it looks like we're finding a new resistance line right up here. Looks like about 174 or so. So as you see, we trade in that thin range once again. We have a little trouble getting over it, but we get over it just slightly. So you could draw those Fibonacci lines. Of course, these would be reversers. You'd have 0, then 0 here, then 0.236, 0.382, 0.5, so on and so forth. So I know I went into that a little bit, but essentially, yeah, let's get back on it here. Yep, first support level today, 54.94. So just looking off the chart, not even making the lines, already knew. So retested 0.382 retracement. So I want to make this a little quick since having done all that Fibonacci retracement stuff with you guys on technical Tuesdays and everything, but we will be getting my boy Dana Marcus on here next week, and we'll be doing a little bit more on the technical side, kind of looking more into reversals. So you can download historical data as well for those of you that like to chart things. So I can look at the historical open, high, low, close, adjusted close. That's taking out the dividend aspect as well. Because when you pay out a dividend, the ex-dividend date, you're typically going to see that stock go down slightly because you're paying out money from the stock. So the stock is technically worth less because you paid money out to people. Volume is well traded on each and every day. So I see the historical prices. I can do dividend only. I can do stock split days. I can pick the time trend as well. Default is a year, frequency daily, weekly, monthly. So if you want to chart that out yourself, maybe do some algorithmic trading, or maybe maybe look at some trends such as how we see on this right here. Do some automated Fibonacci line drawing. Have that option, but that's something that you're going to be doing maybe if you're a little more advanced and you really like to look at that aspect. I can see the profile of the stock, the website. If I want to look on the website a little more, full-time employees, you can see all the key executives as well, how much they get paid, whether they have stock options and if they exercise them, when they were born as well. Description of the company, corporate governance, scores 4, okay. So it says right here, indicate so rank relative to index for region, score of 1, lower governance risk, 10, higher. So it looks like it's right about in the middle. Compensation is at a 2 though. So compensation is not, really digging in to their corporate structure. So that gives you a little bit more ease. Then you can see all their recent filings, aka those are that's a regular financial statement that you're going to have coming out around earnings, 10Q as well. That's your quarterly reports. You can look at those full filings as well, just so you have more information on them. So this is more of just like a quick dive on something that I might be looking like, all right, my trade options on this, might do a little short-term thing here. I can look at some analysis as well, number of analysts, those trend recommendations, kind of getting to see what they're thinking on the stock as well. EPS estimates, EPS actual, surprise, percent and difference. So I'm seeing here that they've actually been beating earnings per share. And hey, look at this EPS growing ever since last Q2. Why? Building materials, housing, siding. What do we have going on right now? Explosion in home construction, explosion in building material costs. So they're raking in a lot of money right now. And we got an infrastructure plan going where they're talking about building even more homes. So even while those materials prices might decrease or settle out slightly, I feel like going forward in terms of the macro trends, they're probably going to hold something close to steady just because of the fact that, we're going to still have more homes built. We have more millennials, Gen Z getting to home buying age. While everyone may not have the money to buy a home, someone's going to need it. All right. Year ago EPS, 1208. So they're saying that next year we're thinking we're going to accelerate up to $12.08 for EPS. Current year only at 431. Next quarter 156. Current quarter, it's accelerating right there, man. If I look at the holders as well, it's one thing I really like to see. Percent held by insiders, percent held by percent of shares held by institutions. What? Okay. Interesting. So this is heavily held in index funds and ETFs. All right. Top institutional holders, BlackRock, massive, massive, massive asset management company right there. So if they're on something, that's something to really, really watch. Vanguard, another huge one as well. You see that they're combined, they're making up about 25%. Goldman Sachs in here as well. See the insider roster, the recent insider transactions, whether they've been buying or selling shares as well. If you got a lot of insiders selling shares and you kind of see a bearish trend, it's usually not a very good sign. Sustainability, not much on that. Let's look at some of these statistics. All right, so the fiscal year ends December 31st, 2020. Some companies haven't ended. Ooh, whoa, profit margin, almost 25%. Operating margin, almost 32%. Wow, operating margin, that's essentially saying that for actually operating the business and the activities that they have from actually running the business, they're still profiting about 33%. It's about 33 cents on every dollar. Profit margin from everything that they actually sell, it's about 24, 25 cents for every dollar. Return on assets. So that's the assets that they actually have and that they're using to drive their business forward. So they're making or bringing in about 29 cents per dollar of their assets on the books. Return on equity, 65%. So about for every dollar in shareholder equity that they actually have, they're bringing in about 65 cents. Revenue, 3.22 billion. Revenue per share, $29.41. Okay. Gross profit, 868 million. Telling you, you've seen it right there. Earnings before interest, taxes, depreciation and amortization, EBITDA, very important number, especially knowing that they have a positive EBITDA and it's 1.16 billion. That EBITDA is just under a third of the revenue. Diluted EPS, quarterly earnings growth year over year, 869%. So one, it's because of the huge housing boom. Two, materials prices increase, but also as economy has been opening up, COVID and everything, they're just bringing in even more money from that. Balance sheet, how much cash they have, 645 million on hand. Total debt is 376. Total cash per share, $6 per share. Okay. total debt. All right, so that just shows me that they have more cash than debt. All right, that's good. Current ratio. It's current assets over current liabilities. Current ratio, if that's a number that's over 1, that means that they have far more current assets, such as cash, cash equivalents. So things that you can essentially turn into cash in the period of a year. They have far more cash on the books and things that they can use to pay off their current liabilities. It's like loans and things like that that they have to pay off within the next year in comparison to the actual cash that they can get within the next year. So that's good to know, because it's okay. If things are to go south, you can actually protect your business, and you got basically a rainy day fund in a way. Operating cash flow, 982 million, leverage free cash flow. All right, I'm actually really liking this company at this point. Their last split factor, last time they had a stock split, 2-for-1 stock split. All right. Percent of the float, that's short, 9.82%. Shares outstanding, 7.42. So average for shorts, like I think like 3 to 5%, or like 3 to 7% or something like that. So it's not too much. It's actually short right now. Average volume 10-day, 2 million, 3-month, 2.49. So in the last 10 days, looks like their volume has been holding pretty steady compared to the 3-month line. And 50-day moving average, how talking technical Tuesdays about how that matters and whether it's above or below 200-day. So we're still well above. However, we are currently trading at a price below the 50-day moving average. So that's something to really watch. As you also see, that 50-day moving average is hovering really close to that short-term resistance line. 52-week change in this stock, 113% compared to the S&P's at 37%. Okay. So you can look at these statements annually, quarterly, or monthly. I'm looking at the market cap. So I want to look at quarter. You can also, download this. So, all right, market cap. See how much that's rising right there, quarter to quarter. That's a huge jump. Enterprise value, trailing PE. So it's trailing PE very, very, very high in this area. So my guess is that that's where the stock split was possibly occurring. Forward PE. Oh, never mind. Not what stock split was occurring, but rather because everything being closed down due to COVID. Duh. So they had probably some shutdown operations, less construction going on. So price to equity ratio. So they weren't just bringing in much money. The trailing 12 months before that. But then if you look at their forward PE, because the price they were trading at that time and how much money, because you saw from everywhere from Q2 of 2020 and beyond, they had accelerating growth. So that's why their PE is rising now. If you look at their forward PE right now, 4.65. Yeah, this company is looking pretty undervalued at the moment. Price to sales. So price to sales is another thing. So it's price to book that you're going to want to compare to the rest of their sector, because these numbers can be arbitrary when looked at on their own. Enterprise value over EBITDA, and same with enterprise value of revenue and EBITDA. All right, so let's see here in terms of valuation measures. Where are we at? Oh, financials. So income statement. I'm gonna look at your total revenue right here, your annual total revenue. Man, look at that. In a COVID year, they still made more money than they did in 2019. That lets you know how much they're making over this rise in building material costs, but also just in general, just how much they're accelerating right now. It's back to 2017, 2018, they made pretty much equivalent revenue to that. Their cost of revenue is staying pretty close. Their gross profit was at 2017 levels last year. You see, and if you just look at their gross profit and their revenue, so the revenue has been holding kind of steady. It was holding kind of steady up till about 2016, and then you see that jump in 2017 as more homes being built. All right, let me look at quarterly. Accelerating revenue is something I really like to see. Yeah, so again, staying relatively flat. December 31st, 2018, that Q4 2018 report, all the way till about Q2 2020. And then you see from there just accelerating from there, almost double from the Q1 results from the of this year, from Q2 results from last year. Whereas the cost of revenue didn't go up very much. Gross profit close to quadrupled. Operating expenses declined. Operating income, look at that massive jump. Net operating expenses. Wow. Wow. Pre-tax income, look at that difference. Basic earnings per share, man. Look at that acceleration. Wow. So this is something I'd want to do a deeper dive on, but from what I'm seeing so far, they're looking like, yeah, now I kind of understand why they have those high price target estimates. Balance sheet as well, total assets, liabilities. So assets are what your company actually has uh, under their control, in terms of like cash, cash equivalents being that current assets aspect, inventory, receivables, it's like money that people still owe to you, inventory or products that are currently unsold, but that you can sell for money. It's just the value of those products, raw materials, work in progress, finished goods. So that's something you learn in like um, managerial accounting. I got some notes on those I can share. Total non-current assets, net PPE, property, plant, and equipment. So that's essentially non-current assets, means it's something that like couldn't be turned into cash within the within the next year or some. Huh. Wow. Working capital. Okay. Shares issued today. Steady offer shares annually, but it doesn't look like they're accelerating the numbers. So it's not like they're really running out of money or anything like that. Let's look at quarterly. Increasing assets, increasing current assets, especially increasing cash on the quarterly basis. Look at this cash flow real quick. Annual cash flow, operating cash flow over the last year. But if because trailing 12 months is just from the end of the current quarter or last quarter results back a year. So right now, because it's not a full year, I'd more so want to compare right here to see that acceleration. Investing cash flow from their investments, so they spent some money on some investments or have lost some financing cash flow. And cash position, I do see that 2020, that they ended up having a stronger 2020 and 2019. And it looks like they're slowly catching up to 2017, 2018 once again. So they're currently at about 2015, 2016, 2014 levels of and cash position, but they have been increasing in that trailing 12 months. That's also good to see. Free cash flow increase, trailing 12 months increase again. Let's look at that quarterly number real quick. Here we go again. Operating cash flow, steady increase. So we see that it stays relatively about the same, but let's see what they did with their money. And in cash position still higher. Where's the major loss? So no major losses by any means, but they did buy back some stock, I see, and they have been buying back stock the last 3 quarters. So that just goes to show that, yeah, they definitely do have some extra money on hand, looking to keep that, looking to either inflate that PE value or rather just to return more value to their current shareholders in terms of raising the stock price by buying back stock. And even though they've been doing the stock buybacks, the free cash flow is still increasing. So another really good thing to see. All right, so that's just a quick initial look at the stock. So in this video, I'm not gonna do the technicals and everything as well, but because one thing I like to do for a new company is I like to just kind of look at it at first and then come back to it in a little bit. because I don't want to make like a rash decision, quick decision, nothing like that. That was just me looking at it real quick. And then so this would be a situation where I want to check it out one more time, few days, track it for a few days, put it on a watch list like I did, and watch it for another week or two in earnings, see what happens. If it's in a good position with the way it's trading, I might nab a little short-term option from there, and then see how it does with earnings. And then from there, if I have enough cash in my account, situation where I exercise the option. If not, then go ahead and just sell the option. But probably something where I'd want to look in and just be like, okay, the earnings are really good. Let me buy a few shares. Let me start a position and let me just monitor it. But I want to look for a pullback or at least some basing before I do buy in. Because if it accelerates after earnings, I don't want to buy in at a level where it's going to pull back, because then I just wasted money by buying shares at a level where it's like I could have got more for cheaper. So it's an initial look at stock research. I know it's not super, super in depth, but I don't want to throw too much at you at once. But just want to make sure I got that out to you. But thank you so much for listening and watching. I'm also going to put this up as a pod, but this will be available on Facebook. Also put it up on our YouTube as well.